Live from our studio in Atlanta, Georgia, this is the A1 Trading Daily Show. Whether markets are rising or falling, we're here to keep you up to date with the latest market news. Join us as we trade currencies, commodities, and indices live, Monday through Friday.
Hey everybody, welcome back to another live stream. We are back in the markets for another day here amidst some cooling numbers out of Europe and the UK. We saw PMI numbers, both manufacturing and services, come out, and we're going to go over those numbers here in just a moment. I've got my S&P 500 trade pulled up, which is not going so well. You can see the area of support that I initially bought in. It held nicely to begin with, but now we are currently floating a loss. So we saw a bit of a pop here and now have come down since then. So trading at 432.93 is, of course, the S&P 500, the SPY ETF. This, of course, tracks the S&P 500. So my long position here, not working out so well, and not my best trading day, that's for sure, as price is kind of coming down pretty hard now. So let's jump into the rest of the world. What's going on with markets here today? I'm going to go full screen just for a moment here. So here's the S&P 500. You can see prices coming down. And of course, S&P, one of my favorite things to trade. My question for price here today will be whether or not we can hold this next area of support. So my stop loss is just below this area. So if price, essentially, if it breaks underneath this, that's going to be my cue to go ahead and get out of the trade. You can see that again mirrored on my brokerage account, which is right here. So again, if this level breaks, that's going to be my trigger to stop out of this trade. So we'll watch this one close, see if that's going to hold or if I'm going to get stopped out here. If I do, it's not the end of the world. I do have other interests to re-enter the S&P 500 at deeper retracement levels. So I'm really not too worried. If it does give me a deeper retracement, I'm actually happy to try and buy at a lower price. So I am bullish S&P, but we are getting a pretty sizable pullback now and pushing down here. So again, oh, can you guys not hear me? Someone said no sound. David, if you're lying to me, then you've thrown my mojo off. I think you guys can hear me. Otherwise, I would see like 50 no sound messages. So I think we're okay. So let's take a look. We've got several things here to go over today. The dollar. And by the way, guys, we do have some news. We're going to be watching and reacting to PMI numbers. And that's coming out in about 15 minutes, about 10 minutes or so. And we'll keep tabs on this. So the DXY here pushing down after an initial spike up. We saw the gold market. We'll talk gold here in just a moment. The gold market was quite bullish off the bottom this morning, but very bearish in the last few days. So we'll have to go over gold in just a moment. Let's talk dollar though. I'm going to start fresh on this chart. So we're starting off the daily chart and longer term, right? We rejected pretty harsh this 104.5 zone. So price came up into this region. 104.3 gets printed and we sell off pretty substantially. Let's go down another time frame. Well, actually, before I do that, dollar longer term buy zone, I would say, or not buy zone, but an area where buyers were very strong was the low that we put during May. So May, we put in sort of this triple bottom before rallying off of that. We've since then, again, found that top around 104.5. And we've got to walk our timeframes down to see where we're at today. So now we're on the 4-hour chart. The 4-hour chart gives us a more bearish price reading, I would say. On the 4-hour chart, you've got several instances of broken levels of support, turned resistance, and so on and so forth. So again, here's another one, broken level of support, turned resistance. And again, we've had this most recent push up. The question for the bulls and bull traders, bullish dollar people are going to say, hey, we've broken upwards. We've seen a nice push to the upside. This pullback could be bought. And, I don't necessarily disagree. I think the dollar has had a little bit of an impressive push to the upside. But I would be really cautious when looking at this to get overly bullish too soon, right? We're still, there's been a lot of sellers on the daily chart. The question for bulls will be breaks, retests, if those are going to hold. And for me, fundamentally, I'm not a huge dollar bull, so I'm kind of just I'm a little too neutral to take trades specifically on the dollar right now. So would like to hear from Fed Ivan. He will be coming on next week. We have him on Mondays, so we'll get some Ivan action then. I should also maybe pull up the news as well for you guys. So Forex Factory is online here. We'll get that set up. And again, we have PMI numbers. We had PMI out of Europe and the UK. Numbers came out pretty across the board. A lot of red here. A lot of disappointment in terms of what compared to what forecasts came out to be. And so, the question will be, is the US going to follow? And by the way, this slowing in economy is probably to thank for why the gold market caught a little bit of a bounce, right? Again, gold made a push off of the lows here this morning, and we've got to talk gold. So we're going to talk gold in just a moment here in more detail. Again, PMI numbers came out of French numbers came out, German numbers came out, and we had the UK's numbers come out. All across the board, we had a lot of disappointment here. And so this disappointment has now, again, this is fears about slowing economic numbers that's pushed gold up, right? Remember, people tend to buy gold when things are very uncertain about the economy's health, right? And so right now, with some of this just across the board numbers coming in from Europe and the UK, gold's catching a little bit of a bid. Despite that, though, we're still in a really strong downward trend, and I'm not necessarily, price action wise convinced that this is going to continue. Again, we're coming right back up into a pretty solid level of resistance. For bulls out there today watching gold, we need to prove and see if we can actually start seeing some higher lows and higher highs, in my opinion. So RK said, just wanted to say thank you for the content and community following. Really has given me an inspiration, practical and fun community to be a part of. Thank you for that. That's awesome to hear, and I really appreciate that comment. I hope that these videos and live streams do help people. My goal is, I've said this before, my primary goal is not to be a teacher. And I say that transparently. My goal is not to teach other people how to trade. I am a trader. I trade my own money. This is something that I do for income, out of passion. It's something I really am doing. And so, I love also to create content, and I'm very glad that that helps other people. But again, my goal is not to teach. It's kind of a weird distinction that I make, but my goal is not to necessarily teach other people. But I'm happy to hear that other people are benefiting from what we're doing here, trading, doing our thing. Euro USD is flying. Let's go look at it, David. David points out that euro dollar is flying. I would say, it just depends your time frame, of course. We had kind of an ugly breakout to the downside, though. And I would be really cautious when looking at this euro dollar. Again, let's look at this a little closer. So euro is bouncing today. Again, kind of a little bit concerning, though, because you had this break to the downside here. And now we're retracing into what was a level of support, but did not hold a support recently. So you very well could get some reaction to this level. So I'd be really cautious on the long side personally on euro dollar. Why are you dollar bearish? It's mostly due to, you compare central banks. In fact, let's do that. We've got a software tool for this. So we're going to compare central banks for a moment, and I'll show you. So remember that currencies are all about trading relative to one another. So when we look at the US, the Fed is expected to come to a slow on their rate hikes and even push lower. Well, let's compare that to something like Europe. Look at this. So these are what you're looking at, guys. If you're newer to trading, if you're confused by what I'm doing, what we're looking at is interest rate projections into the future, right? So we are Q2 2023 right now. The expectations is for rates to not necessarily come down and to stay quite high for a long time in Europe in order to get the inflation problem under control. Remember, interest rates going up are bullish for the currency. But if the Fed is projecting right now, the market is debating this, but many investors, traders are expecting one rate hike and then from there a pause and potentially rate cuts next year. So the point I bring that up for is that is a divergence from when we look at Europe. If you're going to be a currency trader, again, everyone can pull up charts and look at head and shoulders patterns and support and resistance. That's easy. If you want to distinguish yourself, if you want to be a professional trader, in my opinion, you've got to work a little bit harder than that. And understanding fundamentals is a lot of hard work. But I think it's an area where you can find and catch great trends because you focus on it. So we talk about that very often on the channel. That's why we built software tools around this entire concept. And yeah, like I said, everyone can draw trend lines, support and resistance. Everybody can look for liquidity grabs. That stuff is relatively simple. Technical analysis, I would argue, is the easier of the two. Fundamentals is very deep. There's a lot of factors that go into it. And not a lot of people really even pay attention to it. But we very, very heavily try to on the channel because, again, that's where I've been able to catch some of the best trades that I've taken is through following fundamental trends that are occurring. So yeah. By the way, guys, we do have this software. If you guys would like access to this software, let's do something cool. We're going to give out some trials to the tool. If you guys would like a trial of this software, so what you're looking at, my company, A1 Trading, we build tools for traders. We build software. We're a software company that specializes in data for currency, futures, and stock traders. If you would like to get access to this tool, if you'd like to try it out for yourself, here's how you can do so. We're going to drop in a link in the description and in the chat, a link to send a message to our support team. If you'd like to connect with our support team and ask for a free trial of our EDGEFINDER software, you can pull up the commitment of traders data. You can look at retail sentiment data. You can look at seasonal trends, which I've got to show you guys the new seasonal trends look. I think we really improved that. If you guys want to try this out for yourself, click this link. And it's going to take you to a direct message center where you can talk to a real person on my staff. Again, we're a software company, so we got a couple people in office who help people with trials. They get people set up, and they coordinate, your access to the tool. So if you'd like access to our software to use the trend data that we use on these, trading videos that we do, the live streams, the trade videos that you see me do, all that stuff. If you want the data that I use, again, we build it. We work really hard to curate it and make it easily accessible to traders. And if that's something you'd like to try out for yourself, click that link. And what it's going to do when you click that link, it's in the chat right now. Let's drop it one more time if you don't mind, Chandler. Thank you for that link. Click chat now once you pull it up, and you can ask for the EDGEFINDER trading software if you'd like to check out our tool. And also, just a reminder, guys, if you are not already in our VIP signals and chat room group, it is currently 50% off. And if you message us on the live stream right now, you can actually get 55% off, but only if you message us during this live stream. So we are coming up to the end of the sale. We've been doing it for about a week or so. And if you are not already, make sure to join the VIP Discord and try out the EDGEFINDER. You can actually just select both of them. So just check both boxes. You can go EDGEFINDER and 50% off the trade alerts group. You get access to all the trades that we're taking, so on and so forth. In fact, I'll even show you what that looks like. So when Frank and I take trades, you can see the full breakdowns as to why we're taking those trades. We do swing trading, shorter term trading, position trading, options trading. Frank even does some stock trading. So we do all sorts of different things. If you'd like to see all of the trades that we're taking, but more importantly, why we are taking the trades that we're taking, we share full breakdowns with each trade. These are more like our trading journals with alert formats so that you get notifications to your phone, so on and so forth. Again, 55% off. We've never done that before. It is the biggest discount that we've ever done on memberships. So if you're interested in that 55% off, all you have to do is message us using the link that's been dropped in the chat right now. So yeah, quite the discount. And I mentioned we were going to take a look at this seasonality data. Check this out with me. So you guys know I really like trading the S&P 500, and let's do the S&P 500 really quick. So what this is showing us, what you're looking at, is the month by month seasonal trend of the S&P 500 over the last 5 and 10 years consecutively. So the last 10 years is in blue and the last 5 years is in red. So we are currently, this is a way to read it, guys. In the month of June, actually, we should look at the month of July. Let's be forward looking here. The month of July is historically a really strong, last 5 and 10 year averages show strong buying for the S&P 500 in the month of July. Now, the reason that that's useful information is that if you know seasonal trends are saying, hey, things are historically, they're pretty good in July, you may be willing to look at that a little bit closer. So me, I love trading the S&P, and that gives me an extra bullish bias. We're going into July. And you guys, when you have access to this data, again, if you get the trial or if you purchase the software, you can do this on your own, but you can select any asset you want. We've done this data study for you so that you can select, if you're a euro yen trader, boom, look at this. Here is your average performance month by month. And this can be very useful. So here's another quick example for the currency traders. April, May, June, and July are expected to be positive months for the euro yen based on historical trends. They've been very positive this year, as you can see with the white line. The white line shows you this year's performance. So I absolutely love this new feature on the seasonality tab. It was just an adjustment in the formatting of how we showed stuff. And then Frank also helped us with percentages on this. So very, very cool stuff. So again, one more time, if you guys, sorry, we do have breaking news. I'm missing the breaking news today. Let's see, we came out one disappointment, one above expectations. Let's see what happened to the dollar. Dollar coming down here a little bit off of the reaction to numbers. Nothing crazy. We did not see any substantial volatility here. The gold market, however, has continued to pop higher. 4-hour chart looking pretty good. We'll see if we can actually break above 1934, 1935. We'll keep tabs on the gold market, but again, still hitting resistance. As a bull, what I'd like to see is breakouts. I'm not bullish in the sense that I don't have positions on, but I'm bullish in the sense of I fundamentally like gold to the long side, but I need to see price action start to solidify that, right? So, yeah. Don't worry, guys. We covered the news. I was 1 minute late. It was, again, a lot of interesting data out of Europe, UK, and the US. PMI numbers can be market impacting, but they're not always a massive spike kind of thing. Especially when you get, earlier looks at Europe and UK, which have some level of correlation to the US's as well. So, yes, guys, we're going to bring in just a moment, we're going to bring Frank and Kenzo in. We'll do a little trio effect here today for a few minutes. But before that, we're going to just quickly take a break to thank our sponsors. This is going to be a quick clip just to tell you guys how you can get access to our data for free if you switch to our partnered brokerage. So we actually have a partnered brokerage that will purchase the software for you. So it's free for you if you switch to their platform. It's really quite an easy process. But if you're interested in hearing more, follow the instructions you're about to see. This is, again, how you get free access to the EDGEFINDER, no strings attached, fully free EDGEFINDER if you sign up with our preferred brokerage. Check this out.
Attention A1 Trading Show fans. If you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right. And yes, like we said, you can get access to all of our stuff there for free if you change to our brokerage, not our brokerage, but our partnered brokerage, 8cap. If you want more information, connect with one of our support reps by sending a message to this direct message link that's been dropped in the chat right now. And there you go. What's up, guys? We've got Kenzo and Frank in the building. Hey, Kenzo, how are you?
Great, thanks, and you, man.
I'm good and happy to have you back on the show. Frank, thanks for being back as well. How's it going?
Hey, Kenzo. Good to see you again.
Yeah.
That's great.
So,
That's great.
guys, a little bit of interesting stuff in terms of PMI numbers coming out this week. But I think honestly, in terms of market volatility, the PMI numbers have done a little bit of boosting to the gold market, as you do see some some slowdown economically. That is going to boost the gold market because, again, I mentioned this earlier. Gold tends to have a positive boost when economies are looking a little bit shaky, right? Because people are like a little bit uncertain about, central banks, or they're uncertain about, just it's one of those people love to hold on to their gold when they're fearful. So we see a little bit of gold pushing up today, which I thought was a little bit interesting. But maybe the more interesting story this week was just everything that happened with all the central banks. We had Federal Reserve, Jerome Powell, chairman speak. We had the Swiss National Bank raise rates. Turkey rose rates, but they didn't raise them nearly as much as what was expected. I don't know if you guys have seen the lira. Here is TRY-USD. This is the Turkish lira against the US dollar, and you can see it's just been on a absolute free fall. I mean, this is a
Whoa.
weekly chart. It's just getting destroyed. So I don't know if you guys had seen that, but you also had, of course, the UK raising rates more than expected. Kenzo, what's your take on everything? What's your thought on all the central bank stuff this week?
Yeah, I think from UK, Europe, actually every central bank, they were both actually increasing their rates. Plus, it's not really surprising because if you checked their CPI, it's still like the inflation is still flying high. So that actually makes sense when they increase the rates. And again, I think it makes their job easy, as Jay Paul actually repeated several times that US is going to increase the rate. So as we know very well that they get affected by the US if they increase if US increase rates or decrease their rates, as we treat the dollar as a central currency or universal currency. So they are forced to do the same because as they are importing, exporting, we use the dollar. So by increasing the rates from the US, it gives other countries, it's just obvious to say, okay, we're just going to keep up with the US. We saw that from Canada, which is very closer to you. Then after we saw GBP, then it's obvious also euro. So every country is going to do the same thing. They're just going to follow, and which is interesting because now we can say the dollar it's very stronger because the interest rate is going up. So it means we just going to go back and just follow our technical analysis, because since all the currencies the interest rate is high, so it means the market will just balance each out. You see.
Yeah, no, that makes sense. And I think that it's an interesting story also with the gold market coming down so much. We've talked about this last week, I think, Kenzo, just about how gold had been paying attention to all the central banks, not just the Federal Reserve. And with the Bank of England coming out and raising 50 basis points, it was a surprise there. Again, you had the Bank of Canada, the RBA. I mean, all the central banks continuing to tighten on their monetary policy. You do have the Fed expected to go one more time. From there, it's, I guess, up for debate whether or not they'll go again. But overall, it seems to be a trend amongst central banks to continue to keep the war against inflation going. And gold, of course, going to struggle in that environment where rates continue to go higher. The opportunity cost of going into bonds instead becomes higher. So I don't know. I mean, in terms of a quick technical breakdown, where I'm at is on the 4-hour chart. You have a bounce off these lows, but I think gold has a lot to prove itself before there's a lot of bullish potential, in my opinion, on the lower time frames. But Frank, we know you've been talking about gold on the higher time frames. Daily chart, weekly chart, wherever you're at, what do you think about gold right now? Is there what are you seeing on the chart?
From a technical standpoint, my sentiment has shifted because it couldn't hold that trend line and it couldn't hold that major level of support that was around like the 1930s. It broke underneath, which was one of the signs that the uptrend is kind of dwindling. So today's spike just kind of seems like a reaction to the weaker economic numbers that are coming out, but I guess it's more so expected with the central banks that are continuously raising rates, and especially in the UK with the surprise of 50. Um, yeah, so gold spikes today, but I'm probably going to look a little lower to enter if I am to get back in this.
I was going to ask, at what point would you start to? You've got that horizontal line around just under 1900. Would you be looking to possibly try again at that point? Where would the gold buys be interesting to you?
So I like where the risk to reward is small. So if it hits in the under 1900, like 1893, or just somewhere in that 90s range, and just seeing what will happen to price action from there. And if it closes underneath, you risk a small amount of your trade, but the upside is back up to the 2000 psychological level, and then maybe even the highs, like if things really work out. But overall, just looking at more demand zones, which gold actually has a lot of, so a lot of attempts can be made.
Yep. We'll see how that one plays out. And Kenzo, what else are you looking at this week? Of course, we talked about a gold a little bit here, and several central banks. Are you looking at any currency pairs, or are you trading the indices? Do you have any positions open?
Yes, today actually we were looking on at gold and other currency pairs as because of Jay Powell having like 2 meetings in a week. It wasn't going to be safer for us to trade like Nasdaq or US 30. So for me on gold, I think it's bit actually on two positions. Actually, I can say now the structure shows me that there is a possibility for a downtrend, but I will actually change that. I can see now the market is pushing up. I'm just going against the trend. We just have a nice buy here, but the structure is still actually bearish. Yes, we understand because of interest rates, but I think this interest rates is all about the panic. It's like when they say, for example, when they say they're going to increase with maybe two times in a year, mostly we panic this week. You see, they're going to panic this week, but in few weeks, everyone's going to go back to normal and say, okay, we already know that they're going to increase. So everyone's just going to go back and buy, whether it's gold or whatever. So I'm expecting that to happen here. Yes, we saw a panic going down, but if we break, let's say, at around 960 there, 1960, I will be thinking about buying, because now it's no longer actually a surprise for us to say a Fed, they're going to increase the rates. Everyone already know about that, you see. So it's not going to be, it's like, let's say, for example, it's like if they say we're going to fire you actually in 2 years, maybe you're working somewhere, then that week you're going to panic, but 2 months later you're going to say, oh, I'll be preparing, man, it's fine, I'll just do something else. So that's why the market also panicked here. I think the market will just go back to normal, and once they increase, it's not going to be a surprise anymore. So we're just going to buy.
Okay, fair enough.
So,
and so you've got your target in mind, and keep going. Sorry to cut you off.
yeah, so I was just going to go on US 30 actually. US 30 was the one that we were already selling. On this, actually on indices like US 30 and Nasdaq, yes, I can expect the panic, but I just like to see a reversal beside interest rates. The way the market pushed up very quick, I'm just expecting a very nice push to the lower side, maybe before we see another push. Similar to Nasdaq, the way it pushed up, the way it jumped to the upside, besides interest rate, I'm still expecting a nice reversal before pushing up. I think some people like us who just buy every day, they are, or swing traders, some of them, they take in profits, then we might see the market selling, then after maybe we'll see the market or going up again.
Yep, fair enough. And I've got a SPY trade open, or an S&P 500 trade open, Kenzo, in terms of the indices. That will be interesting to see if I could stay into it. To be honest, that to go against my trade here, or to talk of my trade. So I entered this zone here. Uh, price came down to this area. I picked it up long, but it's since come back down. So yesterday, overnight, market kind of reversed. It went the other direction. It went very nicely for me initially. Prices come down. However, for me, just personally on the S&P 500, we had this low that, if I remember this correctly, this was the day that we had. I think it was some announcement from the Fed. I can't remember exactly what was said, but we put in a low, price shot down, shot back up. This was the day that we paused. Sorry. So we paused on this day. Markets were very positive, have since come back, and I decided to try and pick it up on the long side. My stop loss, for those of you who are watching the indices, is below that day's low. So on the day that we had, again, the decision to pause from the Federal Reserve, if we break underneath those lows, for me on the S&P 500, that's going to be my trigger to go ahead and take a loss. At that point, I think I'll lose probably about $1,200 on that trade. So I am, watching the S&P close. Of course, this is, we'll see how it trades. If it's been very good overall recently, but if this doesn't hold, it's probably just going to be something I don't want to be a part of anyways from a technical perspective. But if it's able to hold this area, I think that we still could get some decent risk to reward if this thing recovers. I chose the S&P instead of the NASDAQ just because, in terms of NASDAQ price action, I think that we have a bit more of an overextended move there than in some of the other indices.
Mm.
But I also kind of just like the S&P, as it is slightly less volatile in terms of a percentage move, which I personally prefer for my trading style. So I like the S&P. We'll see if we can hold that going into the rest of this Friday. Of course, Friday is a big day, as sometimes you get sort of end of week rallies or end of week sell-offs. So Fridays can be very, very volatile. Frank, what do you think on the indices? I know you had a trade on NASDAQ. Are you looking to re-enter NASDAQ at all?
Yes, but right now I think I'm more focused on JP, which is something I sadly got stopped out of last night, or at some point earlier today or yesterday. There was some CPI news for the yen, came out higher than expected, caused a major sell off, stopped me out of the JP, but fortunately I got to stay in the pound yen trade. So I think what's stirring up the market there is, the surprise was like a higher number than they wanted, and they're worried that maybe the BOJ will start acting on this. Even though they've been talking very dovish and wanting to focus on the economy and economic expansion and all this stuff, but I think it could be an initial, jolt. I'm not really sure if this is going to be a prolonged move to the downside. So I'm focused on this index right now, especially as it sold off as hard as it did within like one single day, which it hasn't done in a while. So I'm looking at the JP 225, and then maybe at this level where it's at currently, or if it touches lower, we're just gonna have to see what the daily candle does. But I'm not gonna try to rush back into it after that hard move to the downside. Um, but currently still in this pound yen trade, which is the same kind of analysis, except the only additional factors that the UK raised, or they were planning on raising rates anyways. So I got in, and then I was wondering, because CPI was higher than, or it wasn't higher, but it stayed the same. So kind of sticky inflation. Like what were they going to do? Were they going to be more aggressive, or stay the course? Like they definitely weren't going to pause. So holding on
Yep.
to a negative bias against the yen, basically. So a bullish thesis on the Japanese stock market, and then bearish on the yen. So
Yep. And Frank, you were really on it with the pound yen concept. I'll show off for you for a second. So Frank called out and totally called this. Frank is a very modest guy. He's a very humble dude, but he totally called with GJ specifically the possibility of sticky inflation prompting the Bank of England to be even more aggressive than a 25 basis hike. I mean, there it is in words. We lost Kenzo. He might be back in a moment. So essentially, they did exactly that, right? They came out with a higher basis point rate hike than expected with the CPI number on, I think it was Tuesday or Wednesday. I can't remember exactly, but yeah, anyways, pound yen flew off of that. And so really good call there in terms of that GJ trade. So we'll see if that one continues to run. I'm generally pretty bullish on the pound as well. So we will have to see if that is able to persist. Do you like the pound against the yen better than the pound against the dollar, or do you like both?
It's hard to say. I think maybe pound yen. That's kind of why I took it, I guess. Pound dollar, the dollar's just very strong in general. Like any sort of the smallest amount of news or anything like makes the dollar strong again, and people like want more of it. So it's hard to say, especially how GU is very correlated with the stock market and also have a bullish bias on the stock market.
Sure.
So I don't
We'll
know.
go back Kenzo now. He's here with us. Hey Kenzo, welcome back.
Yes, thank you. On my side, we had a power cut around 4. So yeah, sorry for that. So I can't share the other screen because it's off.
No problem.
Yeah.
No problem, Kenzo. So Bank of England stuff. We were just talking about the pound pairs a little bit. Do you trade pound pairs, and if so, do you have any? Are you bullish on the pound? Do you think it's overdone? Do you have any thoughts on pound pairs right now?
Yes, we're actually looking at. Unfortunately, I can't open it now. On GBP JPY and also GBP USD. So that has been actually on a nice bullish move. Especially, we saw a very nice reversal actually today. I think it's today or yesterday. So that reversal was very great. And plus, as they increasing the rates, that is a good thing for us to say we buy, especially against the JPY. So against the dollar, I don't think that is going to be any crazy move, but I think we are still positive on that because of interest rates. I'm still actually bullish on that. So yeah, it's actually interesting for us to buy pound or maybe euro against this other person. Actually, here the best thing that you can do is it's where we are forced to check the other country or the other pair interest rate. If maybe it's not pushing that much or it's not really higher than the other pair, it's easier for us to just buy that because everyone is just adding like serious high like interest rate. So I think they can still push to the upside.
Yep. Good stuff, guys. And again, a very busy week in the markets in terms of central banks. It was good, as always, having you both on. Kenzo, thanks for making it work, even though the power outage occurred. We appreciate your commentary, as always. And before you go, I do want to just say, guys, if you do not already have Kenzo's YouTube channel on your subscription list here on YouTube, we're going to drop the link for his channel. Make sure to go subscribe. He does a great mix of fundamental and technical analysis with his trading. And Kenzo, thank you for coming on, man.
Thank you very much, man.
All right. We'll see Kenzo next time. And Frank, same with you. Thank you for your commentary. As always, you guys can find Frank inside of the Discord. If you're already a member with us, make sure to shoot him a message and let him know you enjoyed the show today. Frank, thank you for coming on too.
Thanks. Have a good weekend.
All right. And guys, we saw so many Frank fans in the chat today. I don't know, what is Super Frank fun? Modern gameplay says he's a fan of Frank. I mean, what is it about Frank that is so elusive to all these people? Everybody loves Frank, and I hate it. I'm just kidding. What's not to love? He's a super nice guy. And of course, like I said, you can stay up to date with Frank and myself. If you'd like to join us inside of the Discord, remember it is currently 55% off if you message us right now. So if you're part of the community and you want to take this thing further, if you enjoy our commentary, if you enjoyed our trading comments and watching what we're trading currently, if you'd like to see more of that, but you'd like to get notifications of when we take trades, join our coaching webinars, join the chat rooms, ask your questions, meet and greet with the team here. If you're not already in the Discord, come join us. It's where all of our very serious subscribers end up over time. We have a lot of great people who we've met from all over the world, people from Asia, Africa, Europe, North and South America. We have people from everywhere in our community. So if you're not already in there, today is the day. Get 55% off of our trade alerts, our chat rooms, coaching webinars, all of it for 55% off. You can try us for 1 month, 1 year, or you can get the lifetime and join the crew forever. We'd love to meet some more of you guys. And remember, here's how you can do it. Right here, there's a link. Click this link and it will take you to a direct message center where you'll be able to chat with one of our support reps. So behind the trading team, we also have our support staff, which helps people get their membership set up and answer their questions and make sure that they're all set with everything in the group. This is not your standard signal service. We are not out here claiming you're going to get rich quick or anything like that. But if you are genuinely serious about trading, you love what you see here in terms of the community that we have, join us inside of the Discord. You'll get all the trades that we're taking sent directly to your phone or to your computer with in-depth breakdowns. You can see when Frank takes his trades and when I take my trades, we share like a journal why we're taking those trades. We've been doing this for several years and we've seen a lot of traders go from very beginner to very successful in this stuff just by joining a community and putting in the work with the rest of the people. So if you're not already in there, like I said, the reason I keep iterating it is because currently it is the biggest discount we've ever done, 55% off any of our memberships. Join us inside of the group. Again, click the link, chat with one of our team members, and we will see you guys inside of the Discord. Thanks so much, guys. See you next time.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And if you create a new trading account with ACAP, you can get tools like the EDGEFINDER completely for free. Check the link in the description for more information. From all of us at A1 Trading, have a great day, and we'll see you next time.